Let's bring in Andrew Rees. He is the CEO of Crocs. Andrew, and I know you got a full lineup of, if our listeners on the radio picture a guy standing in front of a bunch of shoes, that's you. Andrew, thanks for joining us here. It said pandemic winner. I would kind of go against that. You guys were hot before the pandemic. Obviously, where do we stand now in terms of, quote, back to normal, which I can't stand, but I'm going to say it anyway. Where do we fall from your perspective?
Yeah, look, I think we are getting back to normal. I kind of agree with you, Brian. I can't stand it either, right? So as you rightly pointed out, Crocs was really trending very strongly before the pandemic. We were able to win in the pandemic. We were able to gain market share. We were able to gain a lot of traction and attract a lot of incremental customers. As I think about the consumer today, I think about the consumer where they're shopping in-store, online, with brand-dedicated websites. I think that's relatively normalized. But I think what you're also starting to feel a little bit is the consumer feeling some of that compression as they see inflation, as they see interest rates rising. So they're starting to be more cautious about where they spend. Well,
listen, we talk a lot about inflation on this network, as you probably know, Andrew, and the last couple of years, everyone's pointing fingers. Here's the realities, and please, that's as I see it. If I'm wrong, please tell me. During the pandemic, right, we had a lot of money that came into the system. A lot of people that were locked down didn't have anything to do, so they went online and they shopped. You didn't have to discount, is my guess. People would pay full retail for everything, which is why corporate profits across everything, by the way, tended to soar. Where is the consumer now? Do you have to start discounting? What are your inventory levels, and how does it compare to 2 years ago?
Yeah. I mean, you're absolutely right, Brian. So at the peak of the pandemic, there were two major factors affecting companies. One is that costs were higher, right? It cost you a lot more money to get your goods into the country and get your goods to the consumer. So you felt pressure to pass that along. Second, there were constraints, right? There was a shortage of supply. And so you really had no need to discount. And the consumer, if they saw it and they liked it, they knew they had to buy it because they probably wouldn't get it later. Today, I would say we're in a more normalized kind of promotional and consumer incentive environment, where the consumer is looking for some incentives. They're waiting for those key holiday periods where Black Friday, Cyber Monday, when you typically expect promotions. Yeah, I think we're in a much more normalized environment. And there's a little bit of additional pressure from excess inventories, because a lot of companies order too much relative to what is now consumer demand. So there's a little bit of excess. I would say in that environment, Crocs is managing that really well. We are a little bit more promotional, and we do have to incentivize the consumer, but we're still able to translate that into very significant operating profits. And we're really best in class in our sector in terms of how much revenue we can translate into operating profit for shareholders.
Andrew, we have the conversation daily on this network about the resilience of the American consumer. But we also have the conversation about a strong dollar. So it really jumped out at me to see that you're forecasting such strong growth internationally. What do you attribute that to? And is that in spite of currency headwinds?
Yeah, that is very much in spite of currency headwinds. As you can see, we have a very large international business, and that has been impacted both on the top line and also from a margin perspective as the dollar has strengthened. And obviously, I think the dollar is continuing to strengthen with the additional interest rate rises we saw yesterday. So that is in spite of that. And so why is that happening? That's really happening due to the strength of the brand, right? So we've seen tremendous brand strength here in the United States over the last 3 to 4 years. That is now starting to mirror in key international markets. We can see that in Western Europe. We can see that in the Middle East. We can see that in key parts of Asia as we get to, really execute our playbook in terms of engaging consumers with collaborations, with innovative marketing, with new product, and really energizing the consumer. I think additionally, we have an opportunity if the consumer is feeling more constrained over the next, 12 months or so. If you think about a potential recession, we sell at very approachable price points. Our average price point is $50 to $60. We're not trying to get the consumer to part with $100 or $200 or $300 for our shoes. Yep. So I think we're in a great place.
Okay. Andrew Rees at Crocs, really appreciate you coming on. Some fine-looking shoes behind you, Andrew. Have a great day.
Thank you.